Okay, well, looks like the market will have a flat start, but it will be individual stocks in focus. So mid caps like Carborundum, Universal, and a couple of other stocks will be in focus. Mayuresh Joshi of Angel Broking is with us now. Mayuresh, good morning. The stock of the week has been Tata Steel, and a remarkable run for that stock at 360 now. Do you think it's still a good buy?
Morning, Anuj. I think it's really a perspective now on how numbers will get delivered for Tata Steel. And the expectations again are that the domestic business should hold up pretty well. Again, on the international bosses, you're probably seeing firm up happening in terms of the end user prices. But what really happens with the domestic market is going to be key for Tata Steel. And again, I think you're seeing production ramp up happening. The management is extremely confident about their Kalinganagar unit ramping up to full capacity over the next few quarters. And that will have a telling effect in terms of how their India business will shape up. The Southeast Asian operations still a little bit soft, and what really happens with the Tata Steel sell-off in the UK market, I think that will also be a key important determining factor. So again, at these levels, I think I'll be a little bit concerned in terms of how valuations will pan out, and aggressive buying at this levels probably is not suggested.
Okay, Mayuresh, hi, good morning. Let's talk about some of the other stocks in the news today itself. You have the health insurance business of the Max Group, Max India, that will be listing later today. Good pedigree, very good business, good revenue growth, etc. For a long-term investor, would you advise entering into Max India once it lists?
Again, I think, Sonia, good morning. Again, what price it lists is going to be very, very interesting, and the healthcare business for Max India is very, very encouraging. It contributes a major pie to the overall consolidated revenues. And if you look at the core dynamics, the average revenue per operating bed is still one of the best, probably, if I compare that with the Fortis and Apollo or even with the Narayan Rudayale. So coming on to the core operational parameters, the healthcare business is doing exceptionally well. It's also expected to add a few more beds to add the operational capacity of around 2,250 odd beds. It's doing exceptionally well. Coming to the Max Bupa part of the business, I think it's a very small business component at this point of time. But even if I exclude the treasury stock of 300 odd crores into the valuation, the enterprise value, specifically the healthcare business, considering the kind of stake that they've got in that, is still pretty large. So I'm expecting a good listing anywhere between 95 to 100 rupees. And yes, I think long-term investors, because I'm extremely optimistic and bullish on the healthcare industry in general over the next few years, where the pie itself is expected to grow at a pace of around 14-15%, and the entire healthcare industry expected to touch around $280 odd billion, with medical tourism forming almost $8 to $10 billion, private healthcare probably still taking a lion's share in terms of the growth addition going forward. So I remain optimistic. So if the stock lists around these levels, if it possibly corrects, I think long-term investors can definitely have a look into the stock.
Okay, well, Mayuresh, what about the India Bulls Group stocks? We have this big IT raid, of course, confirmed by the company as well. The stocks recovered in late trade yesterday, but on India Bulls Real Estate and India Bulls Housing Finance, how would you approach them now?
No individual coverage, Anuj, on these ones. But again, I think one really needs for clarity to emerge on what has probably happened yesterday. But again, I think if you look at the core business dynamics, specifically on the housing finance business, I'm not talking about India Bulls, but general. My own sense is that with rates coming down, the borrowing cost for a lot of players should start coming down. Anybody who's having a maturity paper of more than 2 years, 3 years in terms of repayment of their short, medium-term debt, I think they can probably look at NCDs, and that will probably get their borrowing costs down by anywhere between 80 to 100 odd bips. Add to that, I think if you're looking at advances growth specifically on the retail side, growing anywhere between 90 to 21%, you can have a similar growth probably in terms of earnings span out. So I think I remain extremely constructive on the NBFC space in general. But for India Bulls specifically as a group, I think you need further clarity to probably come out on what has probably emerged as what happened yesterday.
Okay, well, just stay on. We'll come back to you guys in a bit. For now, let's take a quick check on what's happening with global markets. We haven't done that in a while. The last time I checked, the Nikkei market, that's been running on steroids, and today is no different. So Japan is up another 1% today, up about 123 odd points. As you can see, the Hong Kong market is also holding afloat. A couple of the other markets are just sideways, but the SGX Nifty is flat. No hint of profit taking just yet, consolidating around the 8,500 mark. Good time to get you some more trading ideas in our segment Super 6. But back to our special show, Mid-Cap Multi-Baggers. You heard about the 8 stocks that our guests have picked up, but here are some more from out of the 16 mid-cap stocks. So here's the third set.
company has received the expansion permission from the central government to triple their capacity in next couple of years. And this central government permission is very critical because of the pollution. While this company has all the pollution compliant norms and infrastructure available with them. So very good working. And the best part going forward is that China, which has already seen closure of many of the plants, has now turned importer of the dye intermediates. And I am expecting this company to almost double on the EBITDA and as well as double on the PAT front. Because if you see the numbers, closer to about 20 crores they have all been posting for all the 4 quarters of previous FY16. But as I said, that the major increase in the realization will get added to the margin. So I am expecting EBITDA of closer to about 70-72 crore with PAT of closer to about 40 crore.
They are extremely bullish. They are talking about capacity utilization rates which will be phenomenal, and if they were to organically also grow in terms of the capacity, it's still possible because there's not much of debt that the company is saddled with. My sense is that chemical businesses worldwide are going through a radical shift where our export orientation is improving as well as the domestic consumption is kind of spurring this whole demand side. Given the kind of traction we've seen in earnings, 60 rupee plus EPS is very, very comfortable for this company. If they have 2 good quarters also, not only just the full financial FY17, and if you were to discount it at the at the same P multiple that it traditionally has, you would still attain a target price of 500 in the next 18 months, 24 months.
If you have to have the economy improving, clearly you need better roadways and railways for transportation of goods. For a better urban lifestyle, you require better transportation, which is metros. So Titagarh Wagon actually serves both these sectors. In fact, they recently got an order for 2200 wagons, which is the largest order which railways gave out. I feel that FY17 itself, they should be able to show about 4.5 rupees EPS. FY18, I think this can go to about 6.5, 7. So looking at that, even a 21p at this point of time looks decently cheap.
A holding company for the Bajaj Finance, as well as I think they have the 2 insurance businesses, the life insurance business and the general insurance businesses into it. I think insurance businesses could possibly grow systematically. Believe that I think this particular businesses would also at some point of time go for listing, and that could find unlocking of the valuation for shareholders from Bajaj Finserv. So that could be another play that one could keep it. Maybe I think 25-30% kind of a CAGR growth in this particular activity of both finance as well as insurance company or insurance business, I think is not ruled out. So I think with a view of around between 3 to 5 years, once again I think you get an opportunity to buy into 25-30% kind of a CAGR growth story.
guys, welcome back. Just 7 more minutes and we'll get the pre-opening rates on the screen. Let's get a quick handle on what's happening in the derivatives market this morning. Our colleague Mangalam Malu is here with futures now. Mangalam, morning.
Morning, Sonia. So a couple of stocks that we need to keep our eye out on as far as the futures and options space is concerned. The first one will be the F&O ban which Indiabulls Real Estate has entered into after the kind of moves that it saw yesterday and massive shorts seen there, because of which the stock has entered into the F&O ban period. No fresh positions can be taken as far as F&O positions are concerned. As far as other stocks are concerned, we saw some fresh selling on Ashok Leyland, from some fresh short build up even on Arvind. 21% open interest added there, so some weakness seen there. And LIC Housing Finance as well saw some fresh selling. As far as stock options are concerned, while Indiabulls Real Estate has entered an F&O ban period yesterday, the 90 rupee call saw a lot of selling. Remember, the stock is trading above that 90 rupee mark, so some weakness expected there. Further weakness expected on Indiabulls Housing Finance as well. 700 calls saw some fresh writing, indicating that the stock can seek levels lower than that. And finally, in terms of results, Infosys, the 1200 calls saw some buying ahead of results tomorrow, while for TCS, the 2450 put, that one saw some selling, so that could be a bit of a support zone for the stock.
All right, Mangalam, thanks a lot for that. Manoj Muralidharan is also with us from Religare Securities. Manoj, hi, good morning. IT will be in focus, so let's start with your strategy on Infosys.
Yeah, good morning, Anuj. Anuj, we all know, I guess a couple of years before, the IVs for Infosys used to be at a good 70-74%. But last 3 quarters, if you see, the average is around 33 to 34% where you ideally buy it, and it usually is around 40-43% on the day or a day before the results come in. Now, the strategy where we recommend here, as Mangalam was saying, 1,200 strike call option, there is good buying happening. And ideally, the stock has consolidated with a falling historical wall. That's a good indication, so that it can be a positive surprise. So we would still go with a strangle. I would suggest buying a 1140 put option with a combination of 12,000 call option. That you should get it close to 51 to 54 rupees. Keep a stop loss of 40 and a target of 78 rupees on that.
Any other stock ideas that you have?
Yeah, absolutely. Sonia, we like Dabur from FMCG. This is one stock where we have seen good buying. Even yesterday, if you see the last 1 hour of trade, there was huge spurt in the volume with a good delivery buying and long build up. So we recommend buying even on today's trade with a July future, current month futures. You can buy it close to 315 to 317, a stop loss of 310, and we are expecting a target of 330 on that. We like UPL as well. Needless to say, that was maybe the only stock in that sector where it was positive, and we've seen good cash accumulation, and we believe it is following the concept of VWAP with a fresh arbitrage. So it is a good stock where there will be follow-up buying. So 562 is where the closing is. We recommend buying that. 554 is stop loss, and we feel the target of 580 at least in the short term.
Okay, very quickly, you have a sell on Nifty.
Anuj, the thing here is, yes, yesterday 8500 strike, we have seen some call writing happening, and we believe the break even is close to 68 rupees. So 8550 to 8560 is where, if you get something close to 8540, you can short Nifty, stop loss of 80, and we are expecting a target of 8470 on Nifty and that.
Okay, well, thanks Manoj for giving us all of those details. We have 3 more minutes to go, so let's get some more fundamental ideas in now. Mayuresh, from the IT pack, what's your top pick now? We have TCS today, Infi on Friday. From the heavyweights, what do you like?
So Sonia, again, I think the greater underlying trend generally for this quarter would be wage hikes and visa costs that will have an impact on the EBITDA margin. Couple that up with what happens with the cross-currency headwinds, even that is going to take some sheen away in terms of the core operating performance. However, having said that, my own take is IT players, specifically the top tier IT players like an Infosys and a TCS, is something that I'll still continue and recommend investors to hold on. We're still expecting a 3.84% quarter-on-quarter dollar revenue growth for TCS, around 4.2% for Infosys. And though the EBITDA margins will get hit individually, both these companies probably have seen the worst behind them. Though the Brexit commentary will be extremely crucial for all IT players, what probably happens out of that will be a crucial determining trend factor in terms of how revenues are expected to to pan out. But again, largely I think the new and renewed focus of Infosys on the traditional IMS business, the expectations of increasing the dollar revenues to around $20 billion or dollars, the cash on books, is definitely going to help. The tailwind in terms of improvement in utilization levels is going to be a kicker for the stock as well. For TCS, I think the revenues have only grown by 7.1% for FY16 for weakness in Diligent, Latin America, and probably what you've seen is the worst behind. So I think the management commentaries are robust. My own sense is that the stocks might react positively, but management commentaries are going to be extremely crucial. But I think hold on to stocks like Infosys and TCS.
Okay, Ashwin, I didn't get your calls on metal names, the likes of Tata Steel, Hindalco, some of these big outperformers.
See, on the metals, they've had large rallies. As I'm expecting, resistance to come in shortly, you would take fresh calls only, once these stocks have corrected. There's no doubt they are in uptrends. But if you enter something right now and you run into a correction, you'll be 10-15% lower. So I would like to have some sort of, bad news or, bad global market for metals before you start buying again.
Okay. Prakash, what about you on names like Hindalco, etc.? How are you positioned now?
Well, Hindalco, when I look at the chart, still is positive. There is no sign of weakness. In fact, it can, if you look at the increase the time frame, it can even climb to levels closer to 150. In the short term, there could be some kind of sluggishness while it goes up, but there is a strong support in the vicinity of 130. As long as it holds 130, I think Hindalco is up.
Okay, as long as 130 is holding, it's looking good. Mayuresh, a word on Coal India as well, and how would you approach it now?
No, again, Anuj, if you look at the larger picture and the production estimates, again, expected to create a very decent clip. But my own sense is that going by government estimates and what we're probably seeing at this point of time, and 8.5–9% kind of a growth is not ruled out over the next 3 to 4 years for Coal India. Probably, I think the only dampening factor is the fall in probably e-auction prices, and with coal supply probably increasing over the next few years, the e-auction prices probably still will be under some amount of pressure. So what really tantamounts is how Coal India is effectively able to offset this by increasing to a certain extent the higher grades of coal that it probably produces. So I think the production numbers will probably be in line with estimates over the next 3 to 4 years. Valuations are attractive. So it's a long-term buy, but again, I think it's really a 2 to 3 year call from this point of time. I think the stock might just underperform if the market just roll out from these levels and continue moving forward. But again, I think good dividend yield, it's got a decent cash position on its books. And again, I think the transmission problem, specifically on the 3 railway lines that it had faced, if that probably sees some light of day, you probably will see these production numbers getting achieved over the next couple of weeks.
Okay, by the way, those are pre-open rates, a bit bizarre right now because there are a couple of free crates on ITC in particular. There's a free crate. Okay, that's got corrected. So let's see if that's impacted the market. TCS is showing downtick of 2% in pre-open. That Wipro is showing 8.5% downtick. M&M 6%. So all of that will correct. Some of that is correcting now. So it looks like we'll have a flat start. At least that's what the indication is from the pre-open, and that's the currency opening. It's been strong actually. So now 67. Keep in mind when we had that Brexit issue, the big fear was that are we going towards 70 or so? Far from it. In fact, now we are at 67. So clearly that's been a strong factor for the market. 67.01 is what we have right now, but pre-open rates are still settling, Sonia.
Oh yes, while we wait for them to settle, a couple of stocks deserve mention. Carborundum is up almost about 5.5%. As we've been telling you, a lot of influential investors, HNIs, have bought into that stock, the Murugappa Group company, so 5.5% higher. You have Hexaware that's up almost about 3% Once again, reports doing the rounds that Bearings is looking to sell their stake in Hexaware, up 3% there. Exide has been moving with quite a bit of vigor of late ahead of its earnings on Monday. There is an expectation that it would be a good quarter this time around for Exide. So a new high there. And Escorts, that stock has doubled since February. So there's some more upsides on Escorts. Berger Paints too. So a couple of these mid-cap stocks do deserve mention. But for the frontliners, it looks like it could be absolutely flat. Mayuresh, two of these stocks, Exide and Escorts, have once again bounced back on the investors' radar. Would you buy any now?
Again, Sonia, I think we did discuss this Exide a few weeks back, and again, I have been optimistic on these battery makers. What probably will deliver growth for them will be the auto volumes. And again, if one really goes by the estimates that two-wheeler volumes can increase by 10 to 12%, and even the PV side of business can grow at a similar pace, you might see the earnings probably which have got stagnated for a company like Exide over the past 2 years actually picking up from a low base. Secondly, I think you've probably seen some pickup happening in the raw material prices. So I think the input cost inflation that we'll probably witness might have some amount of dampening effect on the EBITDA margins. But again, I think it will largely be offset by the volumes, and that operating leverage will play on the balance sheet. 40% of the revenues probably comes from the industrial side of the business. And my own expectations is the second half recovery is expected to be seen. Again, Exide can be a key beneficiary both in terms of the industrial capex coming through as well as the telecom capex coming through. So again, I think I remain optimistic on stocks like Exide, even the other battery maker, something like an Amara Raja, where our belief is that the earnings growth can be quite reasonable over the next couple of years.
Okay, let's do one thing. Let's get some more stock ideas. We have Bullseye, of course, this week. Vijay Chopra, Krish Subramaniam and C.A. Rudramurthy.
Okay, those are some trading ideas. We still have about a little less than 10 minutes before the markets open. Looks like it's going to be another day of consolidation. At least that's what the pre-opening levels suggest. And the market breadth is positive. So in terms of gainers, you have L&T, HDFC Bank, Aurobindo Pharma and Tata Steel that are a couple of gainers in trade. We'll talk about more stocks. But before that, let's get you some market opinion. Anuj caught up with Nirmal Jain of IIFL in our special series Unplugged. Nirmal believes that Brexit is not a big concern for India and we will be well on track for a bull market if GST is passed.
It's too early to presume that there will be a recession and the entire Europe will disintegrate. These things are all one-sided version. And even, you take that for granted, then also India is relatively immune to these things. Amongst emerging markets or destinations for investment, India stands out. So I was personally not too worried that from Indian stock market point of view that there's a catastrophic or a disastrous event. But at this point in time, I think that market, even global market, not only Indian market, have taken it in its stride and they are moving ahead. Government has gone to execution mode after this budget, and we are seeing that a lot of policy reform now they are taking place. Now there's a direction to many things. So I think that is a very good sign, and hopefully if monsoon also is good and if GST can go through, that is very likely now, it's much more likely than it ever was. So all those things put together will put us in a very good sort of platform for a bull market.
Okay, we'll get you more of that conversation at 9:40 a.m. only on CNBC TV 18, so you don't have to wait too long. But for now, let's get some calls just before the market opens. A couple of these names have done well this week. Names not just Hindalco, but GAIL and ONGC are also up about 5-6% for the week. Ashwini, how do you approach two of these names now, GAIL and ONGC?
See, ONGC is an underperformer, and probably people who got stuck, this is an opportunity to get out. These rallies have happened earlier, but nothing really comes out of them. GAIL may be a bit of a different issue, but now you have so many gas stocks that probably even they are better gas stocks than GAIL. But between the two, probably GAIL is a better choice, where I would expect levels of 440, 450 to come in.
Okay, the stock of the day today actually could be Indian Hotels. That stock is up 7.5% and the pre-open volumes are huge. The news of course had come in market hours yesterday, but the market may not have got enough time to react to that, and that stock really would be in focus, 7.5% higher. And this is one stock which has actually started to do remarkably well. If it opens at the current price, it will be a new 52-week high for the stock as well. And of course, from the recent lows, it's done well. Sudarshan, on the charts, do you have a view on Indian Hotels?
Yes, it's an excellent stock, and sometimes I wonder how you and Sonia identify these names. I would say that it's a buying opportunity, even if it opens 5% higher. If you are an investor and looking for mid-cap stocks, there's a target of 180 plus for it, so you could easily buy it.
Okay, 180 plus on Indian Hotels. Just looking at screen, Sudarshan. But Mayuresh, fundamentally, at 140, it's been a rank underperformer over the years, but it's been looking strong this year.
It has, Anuj, and again I think one really needs to understand how the numbers will pan out. Clearly, I think if you're looking at the utilization levels for the Indian hotel space and just generally looking at the trend over the last 2 years, I think it has been extremely sluggish. But with expectations of the economy picking up, my own sense is that if the utilization levels start picking up meaningfully, and again, Indian hotels has got a diversified presence both in India and abroad, I think that can have a telling effect in terms of how numbers will pan out. But let the numbers do the talking, because the stock has moved up substantially.
Oh yes, and the news flow today is that the company has, or rather which came yesterday, was that the company has finally sold its loss-making property Taj Boston for almost 900 crores. So after 3 years of a loss-making venture, finally they exited that. So that's one stock.
There's also Morgan Stanley update on that, Sonia. They have a price target of 160 rupees on that, and they mean that they say that this sale would mean a lot of leverage reduction. So it lowers the net debt to equity from 1.4x to 1x, so that's big positive, and it's also PAT accretive. So in fact the bull case suggests that it could add 10 rupees per share to their fair value for Indian hotels, and they have a price target of 160. That's Morgan Stanley on Indian hotels, but this could be one of your stocks of the day, at least in the opening trade.
Oh yes, definitely. Just wanted to get a couple of more comments in on some of the stocks which are moving in the broader markets. You have Nalco, which is up almost about 6% This was a part of our top 10 list, remember, where Nigel was telling us that the mining lease of its Pottangi bauxite mines has been granted to Nalco. So another 6% up move is what you're seeing on that stock. And Titagarh Wagons as well is in the green, up almost about 2.5% or so. A quick comment on any of these metal names in the broader markets like Nalco. Would you trade them?
Well, Nalco, so far, when you look at from a medium-term perspective, Sonia, it certainly looks up and go to 55. But in the short term, like even Hindalco has an indecisive pattern, so has Nalco. So I would be slightly cautious here purely for the day purposes. As far as Titagarh Wagon is concerned, typically sideways. So I wouldn't. Sometimes you get a big day on Titagarh Wagon, but I would avoid it. Want to have it? Stop below 91, but I really would avoid it.
Okay, well, one of the other stocks in focus would be Max India, that will be listing on the exchanges today. The demerged entity holds hospitals, health insurance and senior living business Antara. CNBC TV18's Varinder Bansal in fact spoke with Analjit Singh last month, and let's take a look at what Analjit had to say.
The healthcare sector is not as mature and steady as the life insurance business is. In the case of healthcare, the series is very fragmented. So there are these opportunities, and so for us it was simply a timing issue of saying we see other opportunities there. Do we have to own 41% of life? We don't. So should we do some balancing of our portfolio? And that's a judicious call we took as a promoter group. And it has gone down well. It has gone down well because we have secured something very, very interesting for us in the healthcare space, hopefully with another project for Antara Senior Living. And Max Bupa, why do you think Bupa went up to take its additional 23%? Company is still loss-making, but they took it at par. They see some promise out there. So it was for us a simple rationalization.
Okay, that's Max going to be one new listing, of course. Some flashes on screen as well. The Morgan Stanley call on Indian hotels, that could also be one of your stocks of the day. Ashwini, your 9:14 call?
See, Vardhaman Textile has had a strong breakout, so that's a buy with a stop of 970, target of 1040.
Okay, well, a couple of these stocks from our mid-cap multi-baggers show yesterday are also buzzing quite a bit. Names like SML Isuzu, Balrampur Chini that Mr. Tulsian has picked up. Pre-coal, that was one of our picks suggested there, is also up almost about 1.5%. And keep an eye out on names like, UPL, Orient Paper, etc. that were recommended.
Titagarh Wagons as well is up 2.5%.
Yeah. Okay, so lots of stocks to look at as we head into trade today. But just 1.5 minutes more to go. Anything else on your radar, Prakash, that you're watching today?
Yeah, I would look at UPL. I think UPL certainly is looking good to me. Possible target on the upside could be in the vicinity of somewhere closer to 575, 77. Top below 548, 549 should be fine on UPL.
Okay, Mayuresh, a call on NBCC. The government, of course, has now come out and is selling stake, which is lower than the market price, and we have seen a huge rally. Would you look at this as a buying opportunity, or do you think it's a near-term top?
Again, I think with the sharp movement that we've seen, probably the stock might just consolidate at these levels. And I did like the stock at lower levels. Again, the entire premise here, Anuj, is that the order book specifically from the redevelopment project share will go up substantially for a stock like NBCC. Our own estimates suggest the order book actually touching around 58 to 60,000 odd crores over the next 2 years. Again, I think if you look at the top line growth, that would imply a top line growth of 27%, and this will greatly be aided by the PMC segment of around 30-31 odd percent. What it effectively does to the EPS is expanded EPS from around 8.5 rupees that it probably did for this fiscal to around 11 rupees for FY18. So if the execution is extremely strong over the next 2 years, my own sense is that the EPS can even be upped. So again, I think investors holding on should clearly hold on to a stock like NBCC.
Okay, 20 seconds to go. Ashwini, you have a call on this stock on the charts?
See, NBCC has had a very sharp move, but often, once it has this sharp move, a stake sale announcement comes in. So this is an opportunity to probably enter the stock, and I do think we will get levels upwards of 300, but use this decline to, probably buy into the stock.
Okay, use the decline to buy. The market is opening, by the way, and it's opening flat with a negative bias. The Nifty is in fact now down 10 points, so 85.09. Yesterday's low was 84.93. So keep an eye on that. If some buying emerges there, or if we break there, do we see follow-on selling? So that will be something to watch out for. For now, let's start with the stocks losing ground right now, because it is a weak start. In fact, now at 85.02. So in terms of biggest losers, Dr. Reddy's is down about 1%. Sun Pharma is down 1% as well. So some profit booking in pharma names after recent rally. Banks are looking weak this morning, at least a couple of them. Axis is looking down about 0.5%. IT stocks, not a great start. Infosys, TCS, Wipro, all are in the red. Not by much, I must say. All these stocks are down between 1/4% to 0.5%. So not a major move. And that's what's reflecting on the index as well. Not a major move, just about 85.05. Z Entertainment is down 1%. Hero Motocorp is down about 1% as well. Ambuja Cement, a couple of other stocks like Bharti Airtel also trading with some bit of downtick. On the way up, GAIL is higher by about 1.5%. Coal India is up 1%. Maruti is up 0.75%. BPCL, which corrected yesterday post the adjustment due to being ex-bonus, is up 0.75%. Ultratech Cement is up about 0.5%. So all in all, we'll have to say that it's a sluggish start with a bit of a negative bias, courtesy IT stocks and a couple of banking names. But all in all, 8,500 as of now is holding, and yesterday's low as of now is holding. No problem for the mid caps though, Sonia.
Oh, not at all. I mean, don't be fooled by the headline index, which is flat. There's so much action beneath the surface. The advance decline ratio is healthy at more than 500 stocks on the advancing side. Your stock of the day is Indian Hotels, up 6.5% on the back of news that they've sold their loss-making Taj property, Taj Boston, for almost 900 crores. So big move coming in on Indian Hotels this morning. NBCC, Citi has initiated a buy on that stock with a target price of 300. So after a big downtick yesterday, NBCC is attempting to recover. Nalco is up 4.5% on the back of that mining lease for its Potangi bauxite mine being granted. So that stock is buzzing. Carborundum is up about 4%. As we told you, a lot of HNI is buying into that name. Hexaware is up about 3% Bearings could be selling stake in the company. That's what they're looking to do. And by the way, as we await the listing of Max India, the other two companies which are listed, Max Financial and Max Ventures, are buzzing. Both those stocks are in the green currently. Remember, we're Max Ventures now up about 2.5% and Max Financial up almost 2.5% as well. We're expecting a strong listing for Max India, somewhere around 100 to 110. Let's see how that shapes up today. Apart from that, SRF, which is in the news, is also up almost about 2.5%. And then, you have a couple of others from the metal space like Jindal Stainless, etc., that are not doing too badly. On the downside, it's hard to find stocks which are on the losing end actually. You have Manappuram General Finance, which is just a tad bit under pressure right now. Then Built is down about 1.5%. Adani Power is sulking. And the India Bulls Group, after that raid yesterday, continues to move lower. So a couple of these stocks like India Bulls Real Estate, India Bulls Housing Finance are all lower by about 1.5%. So yes, for the headline index, it's still consolidating, but a lot of action in individual names.
Oh yes, and stocks like PC Jeweler, Cadila Health, a lot of F&O stocks. Stock of the morning actually is Hexaware. That stock is up about 3%. So looking quite strong right now, that one. And a couple of other names like Indian Hotels, that's up 5.5%, and Carborundum Universal also up about 4.5% right now. So a lot of these stocks doing well. right now. Sudarshan, a word on the market opening and incremental calls now?
Well, the markets are opened as you said they would, flat and with no direction. The direction is up, so we just keep our trading stop at 84.80 and wait patiently. Either we'll get more money or we'll be stopped out. There is no new trade in the Nifty or the Bank Nifty, but you talked about Hexaware. Hexaware's rally today breaks out of a small congestion and gives a target of almost 260 or even 265. So it's a buying opportunity.
Any thoughts on Nalco, Sudarshan? That stock too has moved, from 30 rupees in February, now close to 50. Any more upsides there?
Well, the charts are suggesting an upside all the way to 70, but the history of the stock is so poor. It's done nothing for so many years, maybe 10 or 20 years. I've become reluctant to buy, but the charts are supportive.
Okay, NBCC has also opened in the green. As Ashwani said, maybe the decline was a buying opportunity. Ashwani, a word on the market opening?
The interesting bit is that in spite of the strong uptrend, we are, 2 points premium is there on the Nifty futures, and on the Bank Nifty hardly, 30-point premium is there. So I'd be looking to, maybe try a short position around yesterday's highs on the Bank Nifty, because with this kind of, follow through and the building of premium, I don't think we will go too far, and possibly at best we will be range bound. So once we get to some sort of an extreme kind of situation on the upside, I think taking a predatory short may not be such a bad idea.
Okay, well, the mid-cap index is picking up a bit of pace now. The advance decline ratio has moved to more than 700 stocks on the advancing side, and there are some newer names that are entering the list. A lot of the mid-cap multi-bagger ideas are moving quite a bit from our show yesterday. So Balrampur Chini is now up almost 2.5%. It was Mr. Tulsian's idea on our show yesterday. SML Isuzu, a couple of other stocks are also looking good. Escorts continues to move with some strength, and not just Balrampur Chini, it also has Sri Renuka for company today. So that stock too is up about 2%. Sudarshan, any thoughts on the sugar names, and just purely for either an intraday position or a couple of days, would you advise this space?
Well, there's a buy trade in Balrampur Chini. It's a purely intraday or 2-day position. As you said, I have no views on the long-term charts, but Balrampur is giving a sense that higher levels are coming for a trader.
Okay, Balrampur is giving a sense that higher levels are coming on that one. But Prakash, post-market opening, any mid-cap that looks good to you?
I like two stocks. One is Hexaware. That looks good, can climb to levels closer to 240, stop below 228. And SRF, that looks good as well. I think I would have a stop below 1350, trade long. Possible target on the upside on SRF could be in the vicinity of 1400.
Okay, well, gentlemen, thanks for joining us and taking us through the market update. It's a quiet day, but what we're doing is consolidating at the higher levels. One space that has been in focus of late is the metal space.